Assalamu alaikum friends. Welcome to question number 2 of SBR. So this question is about your exchange rate, and we also have some small standards here. So as you can see, this is taken from the March-June 2019 paper, and this all the questions which I am doing, including question number 1 which I have done previously. You can go and check my video. I have solved the question number 1, and this is question number 2. They are from section A. Question section is section A, question number 1. That means for 30 marks. So all these questions are for 30 marks. Okay. So as I told you that always before reading the information, the background information, we'll read the requirements. Okay, but first we can read the background at least to get an idea what the case is all about. So Carbise is the parent company. Since this is a question number 1 in section A, it will always be about group companies and all, all consolidation and all those things. But with consolidation and all, more things will be added. Some small standards will be added, and like in this case it is an international group, so we have foreign exchange also. Okay, Carbise is the parent company of an international group which has a presentation and a functional currency of the dollar. So you see, it's an international group. It says that we have to deal with foreign currencies, so presentation and functional currency. Okay, the group operates within the manufacturing sector. On 1st January 2002, Carbise acquired 80% of equity share capital of Bakelite and overseas subsidiaries. So how much it acquired? 80%. The accusation enabled the Carbise to access new international markets. Carbise transfer surplus work in progress to Bakelite, which is then completed and sold in various locations. The accusation was not as successful as anticipated, and on 30th September 2006, okay, when did it acquire? They acquired it on 1st of January 2002, but 30th September 2006. Okay, that is from 2004 years and 9 months. Okay, starting from 2002 to 2006. That's 4 year 9 months. After 4 year 9 months, because they are not successful, they have disposed it or sold it off. So Carbise disposed of all of its holding. Disposed with on this date, disposed all of its holding. The current year end is 31st December 2006. This is the current year end, but they have sold it in between that. Okay. Now, before we read the Bakelite trading information and the acquisition of Bakelite, how they have been acquired and all, you have been given some exchange rate. You can see you have been given the opening, the closing, and also the average. Okay, and how they have disposed. So now let us go to the requirements. Very important that you start with the requirements. So first requirement says prepare an explanatory note for the directors of Carbise which addresses the following issues. You see, what are those following issues? So if you can see under A, there are 3 issues, and I always say follow it in order it is given. The reason is because you might need to, for example, to do second part of A, you need the support or help of first part of A. So that's why do it in order, so that you don't have any issue later on. First, for 7 marks, the meaning of entities, presentation and functional currency. Okay, so it is, what is the meaning of functional and presentation currency? This is like explanation. So explain your answer with a reference to how presentation and functional currency of Bakelite should be determined. It is not important to give you the meaning. You have to determine also how it will be determined for the bike limited. The presentation and functional currency. 7 marks. We'll see how the 7 marks has been divided between the two. Second part says a calculation of the goodwill. Definitely, it's an accusation means a goodwill or an NCI. Some questions will come like this where you have to calculate. So calculation, even in question number 1, we saw that we have calculated goodwill under 2 methods. Okay, when we valued NCI using fair value and proportionate method. So here, a calculation of goodwill on the acquisition of Bike Limited, and what the balance would be at 30th September 2006, immediately before the disposal of the shares. You see, before the disposal of the shares, what is the closing value? So your answer should include a calculation of the exchange difference on goodwill from period for 1st of January to the, so not only that, but also the exchange difference has to be there from 1st of January 2006 to 30th September 2006. Definitely exchange differences will be there because exchange rate changes from the 2 years. Okay, it's for 5 marks. Third An explanation of your calculation of goodwill. Explanation of your calculation of goodwill. And so to do the third part, that means you have to be very good in calculation first of all, and you also have to understand the processes, what you are doing, the steps you are doing to calculate goodwill. You have to understand. If you are not understanding, you will not be able to write it also. Okay, explain. Explanation of calculation of goodwill. Okay, and the treatment of exchange differences. What is the treatment? And the word and says that it's more than one requirement. Okay, treatment of exchange differences. So the how treatment means, okay, whenever the word says treatment, that means where will it go? You can say debit, credit, the journal entries. Okay, so basically that's what it means, how it will be treated. The exchange difference on goodwill in the consolidated financial statements, not separate financial statements, consolidated, because this is a subsidiary you are acquiring, right? Next, you do not need to discuss how the disposal will affect the exchange differences. Okay, so you don't have to discuss about it. Do not. Disposal thing you don't have to. How it will affect the exchange, that is not asked. Note. Any workings can either be shown in the main body of explanatory note or in appendix to the explanatory note. Explanatory note is like a, basically there is no standard format. It's like a report, not like a report, but in the report, how do you do when you have to do some calculations and all? Financial statements, the main financial statement, there are so many small workings there. For example, how did you get the sales revenue? How did you get the cost of sales? It's not shown in the main body. It is shown as a separate appendix outside the report. So this is also same like that. Either you can show it in the main or as an appendix to the explanatory note. It's up to you. You will see how it is, how the explanatory note has been presented. All those things you have to know. Okay, part B. Explain why the exchange differences will arise on the net assets and the profit or loss of Bike each year, and how they would be presented within the consolidated financial statements. So there are two things. First is how exchange differences will arise on net assets and profit or loss each year, okay, and how it will be presented between the consolidated financial statements. Your answer should include a calculation of the exchange differences which will arise on the translation of bike limited. So it should also include the calculation of when you translate the bike light, there will be an exchange difference. That has to be there. You have to calculate that. Okay, excluding goodwill in the year ended 31st December 2006. Why did they say excluding goodwill? Because the reason is here, when you go to part A, the last third part of A, they say calculation of goodwill. Okay, so goodwill, we know where does goodwill go? It goes in the balance sheet, right? It goes in the financial statements after your assets and all. It's an intangible asset. But when you are translating your financial statements, you are not taking that goodwill. Okay, the reason is because here, when you are taking the goodwill, this shows that when you're taking the goodwill, it can be wrong also, right? So now you don't have that issue in your mind that what if my goodwill goes wrong in part A, so my part B also will be wrong. Okay, so that thing will not come because you're not having that goodwill there. You're excluding the goodwill. You're not taking that goodwill which you have calculated. It's your calculated figure. Okay, you just have to translate. 7 marks. Okay, part C. Okay, so this is the last requirement. As you can see, there are plenty of requirements. Just see how many are there. Under part A, there are 3 requirements. Then B, 1, 4, and in the C, there are 2. So total 6 requirements are there. Okay, you have to manage your time with among the 6 requirements. You have to have the time, and you have to answer all the 6 requirements in that time. Read and understand also, okay? Because anyway, reading and understanding comes before you write. So part C, calculate the group profit or loss on the disposal. So last part talks about the disposal part. Okay, until part B, there's no mention about disposal. Okay, disposal part comes from part C onwards. Calculate the group profit or loss on the disposal. 3 marks only. Okay, 4 marks says. And finally, briefly explain how Bike should be treated and presented in the consolidated financial statements of Carbise for the year ended 31st December 2006. The date is 31st December 2006. Okay, how they should be treated and how they should be presented in the consolidated financial statements. 4 marks. So now let us go to the answer. Okay, before I present you with the answer, let us look at the key answer tips. What is it? This question examines the topic of overseas subsidiaries. So the main thing is overseas subsidiaries. This is the main topic you have to understand. As should be expected, the question requires a calculation of key figures in the consolidated financial statements such as goodwill and foreign exchange differences. Okay, so one is goodwill, definitely it will come, consolidated financial statement. The other one is foreign exchange differences. Okay, so there's two things you have to calculate. Because it's an overseas subsidiary. In overseas subsidiary, goodwill also will come. Goodwill anyway will come even if it's not overseas. But foreign exchange differences will come when it's a overseas subsidiary. Okay, both you have to calculate because both will go in the consolidated financial statement. That's the reason you are calculating both. But also explanations of accounting principles behind those calculations, not just calculations, accounting principles also. So the main theme of the question is this. Okay, before we even go to the answer, we have to read the case study. We didn't read the case study. Okay, we just read the requirements. So for the first requirement, we have to say how presentation functional currency is determined and how for backlight they should be determined. So before that, at least we have to read. Okay, we don't have to read accusation of all those things is not needed. The reason is because we have worried about the functional and the presentation currency in the first requirement. Okay, so we have read the background. We have to read the backlight trading information. Okay, from this paragraph itself, we'll be able to explain presentation and functional currency. We don't have to read the whole case study and waste time. So backlight is based overseas where the domestic currency is dinar. What is the domestic currency? It is dinar. Staff cost and overhead expenses are all paid in dinars. Okay, so expenses are in dinars. However, backlight also has a range of transactions in a number of other currencies. 40% of its raw material are in dinar, 50% in yen. Okay, so 40% dinar, 50% yen. Okay, the remaining 10% are in dollar, of which approximately half were purchases of material from Carbise. This ratio continued even after Carbise disposed of its shares in backlight. Revenue is invoiced in equal proportion between dinars, yens, and dollars. So there are three currencies. Okay, one is dinar, one is yen, one is dollar, and revenue is equal in dinar, yen, and dollar. So to protect itself from exchange rate risk, backlight retains cash in all three currencies. Retains cash in all three currencies. No dividend has been paid by backlight for several years. At the start of 2006, backlight sought additional debt finance as Carbise was already looking to divest. Funds were raised from an issue of bonds in dinar. Okay, funds were in dinar, none of which were acquired by Carbise. Okay, so looking at this, you should be able to tell what is it and what is it not. Let us read the answer now. Okay, it was for 7 marks. So the subject, okay, just see how they are reading it. This is because this is an explanatory note. In an explanatory note, you have to write what is the main theme. A subheading you have to give, subject like. Okay, when you're sending an email to someone, don't you see there's an area for subject? That shows what the report is all about or what is that explanatory note all about. The subject tells you. So you have to be very picky about the subject. You just don't put long sentences. Okay, these are the tips how to select. Put short sentences but something which will tell you immediately what is there. For example, this subject is foreign subsidiary backlight. Okay, so now under this there are two things. Okay, just see how they are writing the answer also. Presentation currency, separate paragraph for that using a subheading. Functional currency, another subheading using, but they are using it this as a subheading. They are not putting together everything. Don't merge everything together. Okay, so let us read the tutorial notes. This tutorial notes is telling you what is expected of you. Okay, some key areas, some key things which you might forget or you might not think about are there in the tutorial notes. So always read the tutorial note when you're going to it. Okay, so start off with the definition of presentation currency. Same for functional currencies. You start with the definition. Always whenever I say something is given to you to explain something, what it means, always start with the definition of that term, whatever it is. So start with the terms of presentation currency and functional currency. Let us first finish with the presentation currency. Okay, before you link it to the backlight limited, first you have to give the general definition of it. Okay, there's a base definition from your textbook. So what is it? The presentation currency is the currency in which financial statements are presented. You see, so this is the first line itself is the definition. The currency in which the financial statements are presented, that is your presentation currency. What is the standard? It is IS 21. Okay, so IS 21, the effects of changes in foreign exchange rates permits an entity. So according to the standard, then you say, what does it permits? It permits an entity to present individual financial statements in any currency. So individual financial statements you can present in any currency. For example, subsidiary might present in their currency, parent might present in their currency. According to IS 21, that's what IS 21 says. So it would therefore be up to the directors of backlight to choose a present. See, because you have to say. Next part also says you how for bike light their presentation of functional currency will be determined. So just finish up with presentation currency first. First you define, then you say what the standard says, and third you say how it will be determined in bike light limited. So this is what they are saying. It would therefore be up to the directors of bike light to choose a presentation currency for its individual financial statements. Okay, so for presentation currency, how can you determine? You cannot determine. It is on the choice of the directors of bike light how they want to present. That is how you are going to determine the currency. So do you see the way they are writing the answer? There's a standard of it. First they are writing the definition. Second they are writing the standard, what the standard says on it, that how presentation currency, how it will be presented. Third, they are linking it to the standard, that they are saying presentation currency can be presented in any currency. Okay, so it will be determined like this. So your answer also in SBR has to be like this: first definition, then the standard, then apply the standard in your scenario. Okay, like this. So presentation currency can be for individual financial statements in any currency. So factors which might be considered include the currency. So these are some factors which might be considered include the currency used by major shareholders. What is the currency that is used by major shareholders? Some of the currencies which you want to present. So some of these factors are there, and the currency in which debt finance is primarily raised. The reason for this is, why is it? Because it has been given in the standard. Okay, so you have how we are saying that currency used by major shareholders or currency debt finance is primarily raised. It is in the standard. The standard says IS 21. You have to read IS 21 in detail to know this. Okay, next going to functional currency, same thing is repeated. Definition, the standard, what the standard says, and then you're linking it with the case study with the standard. Okay, so the functional currency is the currency of the primary economic environment in which entity operates. This is the definition. So since transactions are initially recorded in an entity's functional currency, okay, initially they are recorded where functional currency, so the results and the financial position would need to be retranslated where this differ to the presentation currency. Okay, so transactions are initially recorded at functional currency only, but the difference, when does it need to be retranslated? When it is different from the presentation currency. When the functional currency is different, presentation currency is different, then you have to retranslate. Okay, retranslate the financial positions. I know it has to be one single currency. So let us read the tutorial note for that. Remember that a subsidiary is likely to have the same functional currency as its parent if certain factors apply. Okay, so what are those factors? That parents and subsidiary should have same functional currency. If subsidiary operates with little autonomy from its parent, so this is very important. This thing will tell you. If the subsidiary operates with very little autonomy from its parent, then subsidiary and parent, they are likely to have same functional currency. So do they have that little autonomy from its parent? We have to see it. That's what we have to write about here. Okay, if you see, the answer is pretty lengthy. If you see the answer, you'll not be expected to write this lengthy answer, but the main points you have to write. Okay, so when determining the functional currency of bike light, now they are saying how you are going to determine the functional currency of bike light. Consideration should first be given to whether the functional currency of bike should be the same as Carbise. What is the first consideration? Whether the functional currency of bike should be the same as Carbise, at least wells under the control of Carbise, at least. So first you have to see this in determining functional currency, whether the functional currency of bike light should be same as the parent, the Carbise. So to determine this whole one paragraph is there, you can see, right? So it appears that bike light has considerable autonomy over its activity. Autonomy means the power, the freedom to do anything as they wish. So it appears that who has the autonomy? Bike light has a considerable autonomy over its activity, despite being acquired to make more efficient use of the surplus inventory of Carbise. Because from the case study they told that they are making efficient use of surplus inventory. Surplus inventory is sold to whom? to the backlight only from Carbise. So the despite being acquired to make more efficient use of surplus inventory of Carbise, purchases from Carbise was only 5% of the backlight's total purchases. Okay, 5% only. So we'll see from the case study. What is it? So the remaining 10% are in dollars, of which the remaining 10% are in dollars, of which are approximately half of purchases of material from. So that means out of 10, half of it was the purchases from Carbise. That means 5%. You see, this is why you read sentences, understand it properly, because nowhere 5% has been given directly to you. You have to interpret that sentence, that half of it is given to from Carbise. So that's why they have calculated it 5%. Okay. From total 5 purchases, 5% is only, very small percentage is only from the parent company. So revenue is invoiced in a range of currencies. We saw it was in equal proportion. It was invoiced in 3 currencies: dinar, yen, and dollar, suggesting a geographically diverse range of customers, which although this allows Carbise access to any international market. Okay, we saw that this allows the parent to access to new international markets, is unlikely to be classified as an extension of the parent's operations. Okay, so this is unlikely to be, even though they're having new operations, even though sales are in 3 different currencies, but this is not an extension of the parent's operation. Unlikely, it is not classified as a parent's extension of the parent's operation. Why is this sentence important here? Because if it was the parent's extension of the parent's operation, it will change your functional currency. If it is not the extension of the parent's operation, it will change your function. The functional currency will differ. That's why this sentence is very important. You have to decide whether it's the extension of the parent's operation or not. Okay, so since it is not the extension of the parent's operation, this shows that Bike the subsidiary, has more power, more autonomy. Okay, this is what we wanted to prove, whether they have the power or not. So the volume of the transactions, next is volume between the two. We'll see on the volume of the transactions between the Carbise and Bike would seem to be far too low. It's too low to come to this conclusion. So Bike also appears free to retain cash in a range of currencies. You see, they are free to retain cash in a range of currencies and is not obliged, they are not even obliged to remit the cash to the parent company in the form of dividends. That's why you see that they have not given any dividends to Carbise. There was a sentence like that. This shows they have the freedom to retain it. They don't have to remit it back to the parent as a form of dividend. So, nor does Bikelet appear to be dependent on financing from Carbise with other investors taking up the bond issue at the start of 2006. You see, they are not dependent on it, on Carbise. They are not dependent. This is also another fact, that they are not dependent. The subsidiary is not dependent on the parent company for financing. So all this tells you that they have activity. Bikelet is autonomy. Okay, the subsidiary has the power. So the functional currency of Bikelet is not necessarily the same as Carbise. This is the conclusion you come to. Why? Because the parent is not controlling. Parent, if the parent controls the subsidiary only, parent and the subsidiary's functional currency will be same. But in this case, the parent does not control. Carbise does not control Bikelet to a great extent. Purchases are only 5%. They can make the sales in any currency they want. It's not an extension of the parent's operation. Number 3, they have the power to, they are free to retain the cash. They don't have to give it as a dividend. Even for the financing also, they are not dependent on the parent. So all this factor tells that functional currency of Bikelet is should not necessarily be the same as the Carbise. Not necessarily. It could be same. I'm not saying it should not be same, but necessarily it is not the same in this case. Let us see the tutorial here. So state the primary factors used to determine the functional currency and then apply them to the scenario. You see, some primary factors. Factors means many factors you have to give. And then apply to the scenario. So now let's see. So in first, this is one factor. Okay, all this factor, by the way, Even though they look 4-5 points to you, they are 1 point only. Why? Because they are measuring the control of the Carbise. Okay, all these points are measuring that point only. That's why this is taken as 1 point. Now we are going to more factor. So in determining its functional currency, Barclay should consider the following primary factor. What are these primary factor? Please make sure that you remember the primary factor, by the way, to determine functional currency. This is a very important question that can come for you. So you have to be prepared for those functional factors. Primary factor. What are those primary factor? You cannot think and make up on your own. It's very hard. It's there in the textbook. Go and learn it. So number one is the currency which mainly influences the sale price for their goods. Sales price for their goods mainly influences sales price for their goods. This is number one. Second, so they have listed all the factors here. If you see, you don't have to list all the factors because the question is for 7 marks. If you know how much marks you have to write for the factors, you exactly know whether you have to write 2 points or 3 points and like that. But here they have included all the answer, the total answer. So we'll just go through it for the learning purpose, okay? So the currency of the country whose competitive forces and regulation determine the sales price. Okay, the currency of the country whose competitive forces and regulations determine the sale price, and also the currency which influences labor, material and overhead cost. Which currency determines this? You have to see all those. So the key determined here is the currency which is which the majority of the transactions are settled in. Okay, you have to see the currency where the majority of the transactions are settled in which currency. That currency you have to see. So Bakelite invoices and is invoiced in a large range of currencies. You see, they invoice to their customers also, and they are also invoiced in a large range of currencies. And so it will not be immediately clear as to the appropriate functional currency. So because they are in a large range of currencies, it is not clear what is the appropriate functional currency. If this question was asked in another way, if it was just one or two currency, and they say that in this currency the sales price are in this currency, the cost is in this currency, it's very easy for you to say, okay, this is the functional currency. But in this case, invoices are range of invoices are there, yen, dollar and dinar. You also invoice, you are also invoiced. So it's very hard to tell which one is the appropriate functional currency. It's not clear cut like in this case. Okay, so when something is not clear cut, don't force yourself to come up with an answer. You might say dollar is the currency, functional currency, or some of you might say yen, some of you might say dinar. Don't say like that. Then the reason is because if you say, you have to back it up also. Why it is it? Then it will be very hard for you to back up. Okay, so that's why if something is not very clear cut, you are free. You like this in the marking scheme, you are free to write it that from this scenario it is not clear cut. What is the appropriate functional currency? So nor is there detail about. If there's no detail for you to decide on something, please write it that there is no detail about whether there's a currency in which competitive force and regulations could be important. You see, they didn't talk about it. So we do not know. We do not know. For example, what currency Byglass major competitors invoices in. Do we know? No. We don't know. We don't know about the Byglass major competitors also. And in what currency their invoices in. So we cannot decide it on the face of it. Okay, maybe we have to look some other factors. So if we are not able to decide it based on the primary factor, what is the next thing? Go into the secondary factor. Secondary factor is also there. But if you can decide based on the primary factor, don't go to the secondary factor. Okay, in some cases you might have decided on the first instance itself that this is a functional currency, then don't waste your time to go to the second factor. There's no use of it. This is called wasting time. Okay, don't waste time and write too much thinking you will get too much of marks. No, if it is not required, don't do it. Here in this case we have to go to the second factor because in the first factor we are not able to decide the primary factor. That means, that shows that you have to, when you're learning, during your learning phase, you have to learn the primary factors, you have to learn the secondary factors. So whatever comes, you should be able to write it. If you have to write only primary, you can write. If you have to write both, you can write both, but provided that you have to learn both, not just learn one and go. So if the primary factor is to determine function currency are inconclusive, entity must apply secondary factor. Okay, so just 4 lines of secondary factor. Okay, and make it in different paragraphs. Don't put it together in one paragraph. Okay. Secondary factor include. So what are the secondary factor? From the textbook only. All these are from the textbook. Currency in which financing activities are obtained. So you have to see in which currency the financing activities are obtained. Secondary factor. Second, currency in which receipts from the operating activities are retained. Second is, so receipts from operating activities are retained in which currency? That means from your sales or your purchases, all those things. That they are your operating activities. Okay. Finance. So you have to know from your cash flow statement what are your financing activity, investing and operating activity. Okay. So funds were raised in dinar from the bond issue. If you see your funds were raised in, that is a financing activity, right? It was raised in dinar from the bond issue. They talked about bond issue, and so it would be a pair. Okay. So at least out of the two, either the financing activity or the receipts from operating activity, one of it, if you can say, then that currency will be taken as the functional currency. Like in this case, you see, so it would be appear that the dinar would be probably the functional currency for bike light. You see, the main answer is this, because the funds were raised in dinar, which was in bond issue. That's why we are concluding that dinar is the functional currency for bike light. This is the way you have to answer. Conclusion, only one line comes to the end. But before reaching the conclusion, so many other points are there which you have to write about. This is what you have to do in SBR. Main answer is only one, the final answer, the conclusion. To reach that conclusion, so many things you have to write about before it. Okay. So if you see once again, I will take you to that part where they told about the loan thing and all, so that you don't just see. I have highlighted also the last what I told. Funds were raised from issue bonds in dinar. That's why each statement is very important when they talk about currencies. Okay, when it's a currency question, you have to highlight or underline each word or sentence. So now we have decided that is this thing. Second, we have to calculate goodwill. That was the second requirement. Okay, so that's why you see you have wrote second and you have wrote goodwill also when you're typing. Okay, so now because this is on CB platform, you're not writing anymore. So if you're writing it on the word, make sure that you write it like this. That is the second part, and make it that you write a subheading goodwill. Okay, you have to make it very clear on the CB platform. I will show you on the CB platform also. Okay, maybe after we finish all the questions, how you have to write on it, how you have to do it on the CB platform, the SBR questions you have to attempt. Okay, for calculations you can do Excel, and for Word you can use the MS Word to type. So now next, coming to the goodwill. So be careful that the accusation of subsidy was not in the current year. You see, you have to be very careful. It is not in the current year that you have acquired the subsidiary. But the question asks you for the current year foreign exchange gain on goodwill, not the cumulative gain. Okay, current, not the cumulative gain. Current year, what is the foreign exchange gain on goodwill? That's what the question asks. But when you acquired subsidiary, it was not in the current year. What was the requirement again? Let us go to the requirement again and see. Okay, there is no harm going and checking your requirements multiple times. Okay, so now let me put a tick marks. We are over with this part. We have explained what is functional and presentation currency. We saw how to determine functional and presentation currency for bike light. Over. Second. Okay, this is the way you have to tick. You can tick or you can highlight or you can write a note somewhere that you have finished off with this part, in case you forgot that you are over with it. Second is calculation of goodwill. Okay, what is it? It would be on 30th September 2006. You see, 30th September, current year. But also the exchange difference on goodwill from 1st of Jan 2006 to 30th September 2006. The first 9 months. But you have acquired in 2002. 1st Jan 2002. Okay, so we'll see how to do it. So if you see, okay, you have to explain also, you have to write also. Before you calculate, you are writing. If you are seeing here, they have written first before calculating. It is not possible. How can you write the amount if you have not calculated? Definitely your calculation will be first and you're writing later. But when you're writing in the exam, you are writing the sentence right first and calculation second. Keep some space for writing. You can write it later, but do your calculation, keep it aside. Keep your calculation ready at least. Calculate your goodwill and ready. Keep it ready and write it in sentence that this was a goodwill. Like how they have written here. So the goodwill in dinar on the acquisition of bike light would be dinar 42 million. Let me go there. So I've gone to the last page. Okay, so it will be dinar 42 million. This is calculated as follows. So now they are telling you that this is calculated as follows. Whenever a question comes like this where currency is involved, mention the currency also and mention the full amount. Don't say dinar 42. Say dinar 42 million. It's in millions. But when you're working, of course, you're not working in millions. You are keeping like this. You're writing dinar, millions, and you're working in small numbers, small figure. You're dropping down the zeros. But when you're writing the final answer, write it in full. Dinar 42, not dinar 40. Don't write dinar 42, right? Dinar 42 million. Currency also has to be there. Number also has to be in total. Okay, but when you're calculating here, you're just writing 42. Okay, so just see it is 42 million. You're writing in millions. Okay. So this is the way you calculate the goodwill. It's fixed. First you write consideration, then fair value of net NCI you add and deduct less net assets at accusation. What is the consideration? So for this things, definitely you have to read the accusation part, which we didn't read from the case study. Accusation of backlight. This is the second paragraph which we have to read to do our goodwill. Otherwise it's not possible. Okay. So Carbise paid Dina 100 million for 80% of audit share capital of backlight on 1st of January 2002. 100 million is the consideration. Since 20% they have acquired, NCI will be 20%. Okay, and the net assets of Bikelet at this date at a carrying amount. So this is the net assets, dinar 60 million. Okay, everything is in dinar. Just see, make sure everything is in dinar. So all the fair value adjustments, definitely whenever they give the net fair value of net assets, always they will give you some fair value adjustments also. Always. That fair value adjustments you have to do and then calculate net asset again. That net asset only you have to take. Not 60 million, but that with 60 million something will be added or something will be deducted. Adjustments are there. That adjustments you have to do. Okay, always it is there. Is always this question has been asked in any group questions. Okay, so let us do that. The only fair value adjustments deemed necessary was in relation to a building which had a fair value of dinar 20 million above his carrying amount. So something above his carrying amount means definitely something has to be added. Okay, building, it had a fair value of dinar 20 million above its carrying amount and a remaining useful life of 20 years. So the reason why they have given remaining useful of 20 years means to calculate depreciation. Okay, 20 years at the acquisition date. It is at the acquisition date, remember. Very important. We have acquired when 1st of January 2002, but this you have to calculate on for the current year. Okay, so from 20 years some years will be deducted. So Carbise measures NCS at fair value for all acquisitions and fair value of 20% interest was estimated to be dinar 22 million at acquisitions. So already they have given you the fair value of NCI. You don't have to calculate NCI. The only thing you have to calculate is the net assets. So due to the relatively poor performance of Bikeline, it was decided to impair goodwill by impairment of goodwill comes, you have to take that also into account. Because of impairment, goodwill reduces. So decide to impair goodwill by dinar 6 million during the year ended 31st December 2005. This is another year, not in the current year also. 1 year before the current year. Because of this, this thing will change. Exchange rates and everything will change. So everything needs to be taken into account. Okay. So exchange rates has been given. Okay. When you have acquired 1st of January 2002, it was 1:0.5. Average rate is given. 31st for 2005 is given. 31st December 2005, and this is 30th September. Okay, not even 1 year, just 9 months. And average rate for the 9 month is also given. Okay. So disposal of bike light is not needed now. That is in the requirement C, so we don't have to read it now. With this piece of information, we'll be able to calculate goodwill. So let us do it. So if you see goodwill, consideration we saw 100, fair value also we saw, NCI was 22. Net assets at accusation, the working is here. Since it's very small, you don't have to do an additional working to it. What is it? 60 plus 20. Why 60? 60 was the fair value of net assets. That 20 was above the value of the building was 20 million fair value. So you just take that. It's a net assets at accusation. Okay. So just take the net assets 20. That's it. So 60 plus 20. The depreciation part and all will come in the profit and loss account. When we're calculating that, there we have to take into account. So here just 60 plus 20. The increase in the building. So minus it and goodwill is 42. Okay. So goodwill is 42 million dinar. But what is it? What is it? You have to take it in dollar. You have to convert it into dollar. Why? You have been given the exchange rates, remember. Exchange rates are there for you to convert. Exchange differences are there. What does it mean? You have been given dollars to dinar only. That exchange rate is only given. So convert into dollar. So an accusation goodwill in dollar would have been 84 million. So from 42 to 84 million. How they have got 84 million? Right next to it they have presented. Okay, so when you are also doing, right next to it you also write it. How it is? 42 divided by 0.5. 42 divided by 0.5. Which rate to take? This is also which you have to know. You have goodwill. Okay, you have acquired it on which date? 1st of January 2002. So you have to take 0.5. You have to take this rate only. How do you know it's divide or addition? Some of you know it by just looking at it, but some of you must still, I know that you struggle with exchange rate to pick whether divide or multiplication is the question, right? This is very simple. Just look at the currency. If it's the same currency, you divide. If it's the different currency, you multiply. Same currency, I will write it here because this is for same concept I used to teach my AFM students also. Okay, because there you have to deal heavily with exchange rates and also same currency divide. Different currency you multiply. So that 42 was in dinar, right? So 42 is in dinar and the 0.5 is also dinar. $1 is equals to 0.5 dinar. So 42 divided by 0.5 because both are dinar, which is 84. So 84 is to 42. Another way of looking at it says that your dinar has to be less than the dollar because $1 is equal to 0.5 dinar. So definitely your dollar has to be more than the dinar. Okay. So for 42 dinar, it has to be double of it. You see? Because 1 is double of 0.5. So definitely in dollar terms, this 42, double of it will be in dollar terms. That means 84. Dollar has to be more than the dinar. Okay? If it's the other way around, okay, if you have multiplied by 42 by 0.5, it becomes 21. So $1 is equal to 0.5 dinar. So how can $21 be equal to 42 dinar? Does not make sense, right? So that's another way of doing it. If you're not understanding the division and the multiplication rule. Okay. That date because accusation date was that day. That's why on accusation they have written also. Please make it very clear because when you are taking so many dates, you have to write each thing on accusation. Don't just write the goodwill in dinar would be this much. We don't know at which date that goodwill will be at that price. You have to write it clearly on accusation. Goodwill in dollar would have been 84 million. Here also you have to write million and here is dollar. So write the currency. Don't put it 84 million, just 84 million. Or don't put it in dinar. Sometimes you might forget to write that currency and put dinar. Even though what you are meaning is in dollar, but you're writing dinar. Okay, so don't do this mistake. Next, impairment is there. So impairment also you have to change it to dollar. So impairment was given for dinar 6 million, which this is the date. The date is different. Okay, so now let us read the tutorial note. This would have been translated at the average rate in the prior reporting period. So the impairment charge of 15 million. Charge of $15 million. How? This would have been recorded in the statement of profit or loss in the prior. So in the prior period, it will be recorded where? In the prior period, it will be recorded in the statement of profit or loss, because impairment always goes. Impairment is like an expense, it's a loss, right? It goes in the profit or loss only. Depreciation, impairment, everything goes in the profit or loss account only. So this is a rule, okay? In IS 21, if you are going through IS 21, you know that all the expenses, all the income, whatever is recorded in the profit and loss account are translated at average rate. That's why they have taken the average rate for impairment. Now, some of you might say that impairment can be taken at closing rate also, because impairment goes for goodwill, and goodwill we translate at the closing rate. Because goodwill is an asset, right? It will go in the balance sheet. But because impairment goes in the income statement, so that will take the average rate. We'll go by that rule. That for all the expenses, we are taking average rate. Okay, whatever item goes in the profit or loss account, it is the average rate. So that's why we are taking the average rate of which year? The prior period. Okay. So everything here has to be divided, by the way. Simple rule, because everything is in dinar. That's why. So what rate is this? Average rate for, they have given for 30. Not even. Okay. 31st December 2005. Wait. I'm not able to. Let me highlight it. 31st December. I don't know why I'm not able to highlight it. Okay, so 31st December 2005, this is the rate you have to take, 0.4. Okay, because the impairment was for that date. Which is 15 million. Okay, so it has to be more than 6, because a dollar is more compared to dinar, so more than 6 million. That means in terms of value, 15 and 6, it has to be more than 6. Okay, it is understood. So divide. Next, what is it? So the remaining goodwill. What is the remaining goodwill of dinar? 36 million. How? Because in terms of dinar, goodwill was 42, impairment was 6 million, so impairment will be deducted from it and we will be left with 36 million goodwill. Would have been translated at as at 31st December 2005 using the closing rate. Okay, definitely when the remaining goodwill you will translate, it goes in the balance sheet, it will be translated at the closing rate. Okay, 31st December 2005's closing rate, because on that date only you are deducting the impairment. So this is the closing rate. Okay, you can go back and check the rates. So that is the closing rate. So goodwill in the consolidated statement of financial position as 31st December 2005. Okay, make sure that you write this in full. Don't omit anything, don't cut off any words, don't try to make it short. Goodwill, where? Consolidated statement of financial position. Goodwill will go there. We know that. As at which date? Date is very important. 31st December 2005 would have been how much? 94.7 million. Okay, dollar 94.7 million. It is in dollar again. How? Because 36, which was the remaining goodwill, after you have deducted impairment, you have divided by the closing rate 0.38. They have shown you here. So 94.7 billion. Okay, now it is not enough at 31st December 2005. They wanted at 30th September 2006. So the goodwill of dinar 36 million at 30th September 2006, that means after 9 months, will be translated at the rate on that date. Okay, it's a goodwill, so it will be translated at the closing rate. Okay, not the average rate, closing rate of 30th September 2006. It's a goodwill, not impairment, remember. So this amounts to this. You see, goodwill is increasing and increasing only. 36 divided by 0.35. They have shown it. Because goodwill will be same, 36 million only. For 2005 was 2006 only. The rate only changed. So there divided by 2005 rate, here 2006 rate you divide it. That's where their exchange rate gain will come. Gain or loss will come. In this case it's a gain, because we saw goodwill value went up. Okay, from 2005 to 2006. Now this can be summarized as below. If you want to put this in terms of table, whatever you have explained before, put it in a table like this. Now we can understand it better. Okay, what is it? So first, always make 3 columns. When exchange rate question comes, okay, this is fixed, this is standard only. You write in dollar in millions. This is also in millions, but this is dollar. Okay, first write the currency as it is. Write the rate also in between. Then you write the currency which you want to convert it into dollar. Okay, so dinar, rate, and dollar. Next, start with the 31st September. Accusation thing is not needed. 31st December 2005. What is the goodwill? As at 31st December 2005. Date is very important. Each time you have to write the date. So it was 36. This was the closing rate. You got this much. Next, keep a balance. Okay, this is the balancing figure. So keep a space. Go to the next one. Write the goodwill here. This is the goodwill. This is the closing date of 30th September 2006. Already they have given it for 9 months. Imagine if they would have given you for a year, then there would be a problem. Definitely they will not give you like that. They always give you as it is. If it's for 1 year, they will give you 1 year rate. If it's for 9 months, they give you the rate for 9 months as it is. So you don't have to apportion it. You don't have to apportion the rate for 9 months. Already it is given for 9 months only as 0.35. So now this one. So now just check this and this. The difference 102.9, 102.9 minus 94.7. So the balance is your exchange gain, because 30th September 2006 goodwill increased. If goodwill decreased, then it's a good exchange loss. But here goodwill increased from 31st December 2005 to 30th September 2006. That's why it's a gain. And it's 8.2. It's bold. Balancing figure. Okay. So now, what is it? Exchange gain arising in the current year is therefore, so what is the current year exchange gain? 8.2 million in dollar. Okay, dollar also and million also. Here you are writing 8.2, but when you are writing in answer 8.2 million. Okay, you are showing it also here. How? Now the second part of it. Sorry, the third part. What is the third part? Explanation of goodwill calculation and exchange gain. That goodwill calculation and exchange gain, now you have to explain. Whatever you have done calculation before, now you have to write it both. That's it. So let us read the brief. What is the tutorial note? You need to briefly explain how to calculate goodwill and the treatment of the foreign exchange difference arising on its returns. Let's make sure you identify all the requirements or you will lose easy marks. So let us read. If you see, it's plenty big enough, right? So now, and there's a heading also, separate heading for it. Subheading, always use subheading. And divide it in paragraphs. If you see, each one is in different paragraphs, not together. So the first paragraph talks about on a business combination. Okay, this is a business combination only, two companies acquiring one another. So goodwill is calculated by comparing the fair value. You are explaining in sentence now. Goodwill is calculated by comparing the fair value of a consideration. You are writing the method, okay? So comparing the fair value of consideration plus NCI. That's what we did, right? In calculation, just see the calculation above. This is what we have done. We added fair value NCI with consideration, then deducted net assets at accusation. So now this we are putting in sentences and we are explaining. So business commercial goodwill is calculated by comparing fair value of consideration plus NCI at accusation with the fair value of identifiable net assets at accusation. First 3 lines are for those 3 things, okay? Next paragraph. An adjustment of dinar 20 million is required. You see an adjustment. So that adjustment is required. You have to write that also. It's required to the property of bike trade to ensure that net assets at accusation are properly measured at fair value. Why you have to adjust it? So that it is properly taken and measured at fair value. Third paragraph. Carbise measures NCI using fair value method. You have to talk about it, by the way. NCI is very important. NCI is measured using which method is very important when you're talking about the calculation of goodwill. Okay, so NCI measures using the fair value method. This means, what does it mean? Even in the question number 1 also I've explained this. that goodwill attributable to the NCI is included within the overall calculation of goodwill. So whatever the goodwill will go for parent and the NCI together, it is there in that calculation of goodwill. Okay. Fourth paragraph, you have to talk about exchange rates and all now. So the each year end, all assets including goodwill and liabilities, okay, are retranslated. You see, at the each year, see, not only once, each year and you change it, you have to retranslate because exchange rate changes every year. So it is retranslated using the closing rate of exchange. You see, assets, liabilities, even the goodwill will be exchanged at which rate? Closing rate. Closing rate. It's a rule. So exchange differences arising on the retranslation are recorded with very important. Very important. Where will exchange differences go? Where will that 8 point whatever it is? It was 8 point what? 8.2. Where will it go? Other comprehensive income. Other comprehensive income. Not profit and loss account. So exchange, because foreign exchange differences, gain or loss goes in the other comprehensive income. That you have to understand, okay? Exchange differences arising on the retranslation. Okay, so whatever, because of this retranslation, there are exchange differences. It will go where? Other comprehensive income. It's a rule, you have to know it. Where it goes. This is the treatment. Since the NCI is measured under fair value method, the exchange differences will be apportioned. See, because the NCI is measured at fair value, this you have to understand. Even the exchange differences have to be apportioned between the parent and the NCI. Okay, because that exchange difference is wholly, it includes both, but you have to know how much it will go for NCI, how much it will go for the owner of the Carbise. So it will be apportioned into 80-20 because 80% they have acquired, that means 20% is NCI. Okay, so 80%, 20% between the owners of Carbise and NCI. Let us read the tutorial notes. So if the NCI had been valued at its proportionate share of the fair value of subsidiary identifiable net assets, that means the second method of measuring NCI, which is the proportionate method. What happens? Then what happens? This is just for your understanding, okay? Then the foreign exchange gain on goodwill, okay, then foreign exchange goodwill would have been wholly attributable to the owners. It is fully to the owners if it was in the proportionate method. So now, only the current year exchange differences will be recorded with the other comprehensive income for the year. So for this year, because they wanted for this year. So in this year, not everything, not your previous exchange differences are not needed. Only the current year exchange. We know because for this year, current year only will come there. So current year exchange differences will be recorded within other comprehensive income. So you have to record what it is. It is current year exchange difference. Where it will be recorded? Other comprehensive income. For which year? 31st December 2006. This you have to write in full. Okay, because it is on 30th September 2006, but it falls in that current year, no? 31st December 2006. So the cumulative exchange differences on goodwill at 30th September 2006. Exchange gain in the prior and the current period would be held in equity prior to the disposal. So where will it be held? The cumulative exchange differences. The exchange gain in the prior and the current period. It will be held in the equity. This also you have to understand. So rule, all of these are rules. It will be held in equity. The exchange gains and all. Before the disposal. Once it is disposed, you can put it in the profit and loss. It will be retranslated there. Okay, reshuffled. Now it is in the equity. Before the disposal of Pikeline. Part B. So part B, you have to talk about the exchange differences on net assets and profit. Okay, even part A is over. Part B is only one requirement is there. So let us read what is the tutorial note. Easy marks are available for explaining why exchange differences arises. Why it arises. Okay. So the net assets of Pikeline would have been retranslated each year at the closing rate of exchange. net assets. Okay, each year it will be translated at the closing rate only. This you have to, because assets goes in the financial statements, in the balance sheet. Balance sheet items translated at closing date. So this is therefore an exchange differences arises each year by comparing the opening net assets at the opening rate of exchange with the opening net assets at the closing rate of exchange. Make sure that you write this thing, okay? Because you're explaining here why the differences arises. Why? Because when you're comparing the net assets, the opening net assets, okay, first the opening net assets you translated at opening rate of exchange, then you translated at closing rate of exchange. So the opening rate and the closing rate are different. Because of that differences, when you're comparing the net assets, the opening and the closing, it changes. There's a difference there. That difference is exchange difference, okay, each year. So additional exchange differences arises through the profit or loss of bike each year being translated the average rate of exchange in the consolidated statement of. Now there is an additional exchange difference, not just that. Why is that additional difference comes? Because you are not only translating in the balance sheet, you are also translating in the income statement. But in the income statement, when you are translating, remember the rates are average rate. But in the balance sheet, you are translating it using the closing rate. So the rates are different, right? Closing rate is different, average rate is different. So when you're translating using two different rates, definitely there'll be a differences between the items. That's why there's an additional exchange difference. This also you have to talk about it. Both income statement and balance sheet item you have to talk. So an additional exchange difference arises through the profit or loss. Okay, how it arises? Through the profit or loss of Barclay each year, because it is translated the average rate of exchange in the consolidated statement of comprehensive income. Okay, so the profit or loss will increase or decrease the net assets of. Okay, the profit or loss will increase or decrease the net assets of Barclay respectively, which as is indicated above will be translated at the closing date of exchange for inclusion in the. Okay, so it will be translated at the what closing date of exchange to be included in the consolidated statement of financial position. So as with goodwill, the current year exchange differences are presented in other comprehensive income. Okay, so the current year exchange difference, where will it go? Other comprehensive income only. So within 80% is for the, so 80% is for the shareholders of Carbise, 20% is for the NCI. Okay, and where will the cumulative exchange differences go? You have to know where the current year exchange differences will go and where the cumulative exchange differences will go, because the exchange differences are taken from the beginning. Okay. So cumulative exchange differences will be included again in equity on the consolidated statement of financial position. Where do we write equity? We write in the balance sheet, no? So this time consolidated statement of financial position. Okay, there and the equity, your cumulative exchange differences will come there. Now let us read some tutorial notes. If you see this answer is not over here, just read. It's a very big answer. Okay. So let us read the tutorial note. The figures from the separate financial statements of Pilot will not include any consolidation adjustments. Yes. So if there are some figure, this you have to understand, okay? If there are figure from the separate financial statements of the subsidiary, it will not be included in the consolidation adjustments. Next. The carrying amount of the net assets of Pilot in the separate financial statements on 1st of Jan was this 48 million, 1st of Jan 2006, because we're talking about the current year. What was the carrying amount of the net assets? In their separate financial statements, okay, this is not consolidated, 48 million. We'll see how 48 million. They have already told here, okay? So it comes in the disposal part. Under the disposal, they have given you all, okay? So let us read that also. Carbise sold his entire equity shareholding, entirely they have sold, all the 80%. On 30 September 2006 for how much? 150 million. So carrying amount of net assets at 1st of Jan 2006 in separate financial statements they have given. And also in separate financial statements, what is their loss for 30th September has been given 8 million dinar. Cumulative exchange gain has been given, and NCI on 1st of January 2006 has been given. Okay. So 48 million dinar. Now let us see. Just give me a minute. Okay, so 48 million, and this will not include the dinar 20 million fair value adjustments. Okay, so this 48 million, remember we had a 20 million fair value adjustments for building, it will not include that. Or subsequent depreciation, even the subsequent, okay, depreciation will not come on this. So the carrying amount of the bike lies opening net assets in the consolidated financial statements. Okay, what will be their carrying amount of net assets? Opening net assets will be 64 million dinar. 64 million. How they have got dinar 64 million? The working is here, right beside it. How? See, in the consolidated financial statements, it will come. What will come? Fair value adjustments also will come. I mean, the depreciation will come. Depreciation related to the fair value adjustment. Okay. In the consolidated financial statements, but it will not come in the separate financial statements because they are talking about here separate financial statement. There it will not come. The 48 million. Okay. But now, because of the 20 million fair value adjustment, some depreciation is there that has to be adjusted in the consolidated financial statement. That you have to take. So here 48 million, the net assets in the beginning. Then because of this dinar 20 million, we have a depreciation. Okay, what is the depreciation? We have been told that the depreciation it is for 20 years, but why it is into out of 16 over 20? If you see here, building which had a fair value of dinar carrying amount and remaining useful life is 20 years, but out of 24 years goes by because this was, when was it? 2002, and you are taking from 2000, so 2003 2004, sorry, 2002 the whole year, 2003 2004 2005 the whole year. So from 1st of Jan 2006, okay, so 4 years has been gone by. From 20 year 4 years is reduced. That's why the 16 over 20, the remaining years, the remaining useful life. Okay, so that you have to add with this 48 million, the net assets. Okay, 64 million. Okay, so bike light would only be consolidated for the first 9 months. You have to understand, they will only be consolidated for the first 9 months of the year because they lose us control on 30th September 2006. This you have to explain. Very important. 30th September 2006, they are selling off the entire shares in the bike light. That means when they are selling from 80% to 0, that means they are losing the control. When you are losing the control, you are no more a subsidiary. You cannot consolidate from that day onwards. Only for the first 9 months. 1st of Jan 2006 to 30th September 2006 you can consolidate. That's it. So losses per the separate financial statements for the year ended 31st December 2006 were dinar. Just now we went through. For the 1 year, the losses were 8 million in the separate financial statements. So only dinar 6 million would be consolidated. Only dinar 6 million would be consolidated. How 6 million? How 6 million? Because you have to apportion it for 9 months. Okay, 8 million loss you have to take for 9 months only. So 8 into 9 divided by 12 is 6 million only. Only this will be consolidated. The loss. And additional depreciation. What is the additional depreciation of dinar? 0.75 million. How 0.75 million? Because 20 million, that fair value adjustments of building 20 million, useful life was 20 years. So you divide it by 20. That is for 1 year you are getting. But you have to adjust this 1 year for 9 months only. Because 9 months. So only 0.75 would be charged for the first 9 months of the year in the consolidated financial statements. Okay, first 9 months only. Therefore, the total loss of Bikelight in the consolidated. So what is the total loss in the consolidated financial statements? It is 6.75. 6 million from that loss and additional 0.75 depreciation. Okay, so total loss. Next, net assets at disposal. What is the net assets at disposal in dinar? At disposal means on 30th September 2006 only. That day they want to know what is the net asset. So that is the date of disposal only. That's why they are writing disposal. So net assets at disposal in dinars would therefore be this much. How? Because now the opening net asset, okay, is 64 minus the total loss. Minus the total loss. Okay. So now let us read the tutorial note. It is important to learn the pro formas for calculating foreign exchange differences. Remember that a profit in the period will increase the opening net assets, okay? Profit will increase the opening net assets, but if it's a loss, it will reduce the. That's why we have deducted it. You see? But did we get a profit? We got a loss. So our loss will reduce the opening net assets. That's why we deducted from the opening net assets the loss. So profits and losses are translated at the average rate, but profit and losses are translated at the average rate. This you have to understand. Pro formas means it's like a standard, it's like a table and all. Standard thing is there. You have to follow it. You have to learn it. When foreign exchange differences, you have to calculate. What is it? It is like this. Okay? Like this. This is that table. How you get gain and loss. So now, let us do the exchange gain for the year 31st December 2006 would be this much. Okay? Let's see how they have got this much. This is this much only, the balancing figure. Okay? Always your exchange gain and loss is the balancing figure only. That means other steps has to be correct. Okay? And this is, if you see, it is noted in dollar and millions. Okay? So dollar, okay, it is not in dinar. Now you have to convert the dinar to dollar. Already you have got the dinar. Now convert it into dollar. That's it. So what is opening net assets at opening rate? Opening net asset was 64 million. Opening rate is 0.38. Next. Opening rate means for 2006. Okay, the opening rate. For 9 months, add average rate. Okay, loss. See, loss you have to take at average rate. Loss comes in income statement for 9 months only. So average rate and 6.75 was the total loss, and then we go to the closing one. So this is the closing one and this is the closing rate for the 9 months, the closing rate. Now it's an exchange gain. The reason is because your net assets, after you minus the loss from the opening net assets, okay, it is the closing net asset is more than that. That's why it's a gain. Okay, because definitely if it's a gain, you have to add that gain, then only your closing net asset will increase. Next, I know this question is plenty big enough. It's kind of getting bored also that most of you will be thinking when are we going to go to the next requirement. So, but what to do? The SBR is like this. So this exchange gain, because you have to write each and everything. You cannot miss out on anything. Then you will lose the marks. This exchange gain is presented in other. So where will this exchange gain go? This 13.4 other comprehensive income. All the gain goes in the other comprehensive income only. So of the total 10.7 million is attributable to the shareholders of Carbise and 2.7. So out of this 13.4, okay, this 13.4 wholly you are not writing it like that. Out of it 10.7 will go to shareholders of Carbise, 2.7 will go to NCI. How 10.7? Working is here. 80% of that, 80% of 13.4, 80% of that gain, because you have acquired 80% and remaining 20% is for NCI. What is a tutorial note? Don't be too disheartened if you make mistakes in your calculations. You see, lots of students would forget to adjust the opening net assets and loss of backlight for the impact of the fair value adjustments. So those students will still score marks for demonstrating knowledge of the key principles involved when translating an overseas subsidiary. So it's easy that many calculations are there. Students can make mistake. Don't become so disheartened and don't become too attached to it. Your mistakes, okay? Just be. Just let it be. Just let it go. You have to learn this skill, especially in ACCA. You have to let some things go off. Some things are not in your mistakes, some in your control. You will make mistake here and there, that you have to accept it and go to that exam hall. You will make mistake no matter how well you are prepared. Let me tell you this, the more prepared you are for that paper, those are the questions where you are going to make more mistakes. And for some questions where you are not so much prepared, but there you are very more alert, you make less mistakes there. This is a true fact. I know, because it happens to me, it happens to many other people also. So don't be so disheartened and don't go with this attitude that I will do everything so perfectly. I will answer 400, no, 100% I will answer everything. I have to get correct, everything I have to get perfect. No, never happens like that. We all are humans. We will make mistakes. Even on the day of the exam, we'll be making mistakes. We'll be coming up with something new which we were not prepared for. Your job is to do justice to it with whatever knowledge you have, whatever the resources you can. Just apply. That's it. You cannot be best, you cannot be perfect, but at least try to be try to complete the paper, try to at least score 60 or those, because the pass rate is just 50%, remember that. So you will make mistake here and there. Okay, so that's it, and let us go to part C now. Okay, finally, and part C, I hope it's much smaller, that I can see from here that it's more like calculation. So I think this question you guys will enjoy it. Okay, so question C, they are asking on the group profit or loss on disposal. Okay, because when you're disposing, we know that there's a profit or a loss going to happen. So what does the tutorial note says? It's important pro forma to learn. This is an important pro forma to learn. You will not be penalized if your figures from previous possible questions are incorrect. Lots of students would forget to reclassify the group shares of previously recognized foreign exchange to. Lots of students will forget to reclassify the group's share of the previously recognized foreign exchange gains to P&L. Okay, so where were our previously foreign exchange gain or losses went to other comprehensive income. But because of this disposal, now whenever this is the rule, okay, IS 21 says that when you're disposing that subsidiary, whatever the gain or losses was there in the other comprehensive income relating to foreign exchange now will be reclassified. It will be put to profit and loss when there's a disposal of it. And here it is a disposal, so it has to be reclassified to profit and loss. So here they are saying is most of the students will forget to put it in the profit and loss. That's what they are saying. So don't worry about this little mistakes which you forget, but focus on the main things which you have learned, which you are prepared. You will get marks for writing the principles, doing some calculation, the workings. You will get marks for it. Okay. So make this that you know the steps. Okay, the steps of calculations you know. Make sure. Let me put a star mark here. Okay, dollar in millions. Start with the proceed. You have sold it for 150 million. Read the case study again. It's given there that you have disposed it for 150 million. Okay, most of the workings are from the previous this thing. So what is the net assets at disposal? Okay, you have to deduct your net assets at disposal. Okay, see part B above. So already you have calculated your net assets. This one, 163.6. You are deducting it, okay? It's a pro forma to calculate group profit or loss. So that's why they told it's important pro forma, so learn it. So from proceed, deduct net assets, then goodwill at disposal also you are deducting it because it's an app. Okay. Goodwill will come the net asset only. So that also has to be deducted. So for that, see this one above. Okay. 102.9. Let us go above and see the goodwill. You see, it's this one. For 30th September 2006 only we are taking all the figure, by the way. So this next is, so this is over, this is over, right, this is over, this is over, this is over. Next NCI you have to add. See calculation below. For NCI there's a working. Okay, whenever there's a huge working like this, you have to do a separate calculations and put a working over here. Okay, so NCI is 48.5. We'll see it below. And finally the exchange recycle to PNL. Okay, and it's a group profit on disposal. Okay, it's a positive figure, so it's a profit. Exchange gain recycle to profit and loss. That's 76.6 we have to see. Okay, for that we'll see the working below. Okay, we'll see the working for the exchange gain also and for the NCI also. So let's see the working. So exchange gain at first of this one per the question was this one. They've already given you. Current year exchange difference on goodwill is this one, 8.2. We see above. Okay, when we calculated the second part of A, exchange difference on goodwill was 8.2 million. And make sure that everything is in dollar, by the way. Currency is very important. Don't put dinar here. This is in dollar, this also has to be in dollar. And on the net asset, it is 13.4 million. Okay, see above in the we did in the part B. So cumulative exchange gain, we have to calculate the cumulative exchange gain until 30th September 2006. What is it? 74.1 plus 8.2 plus 13.4. Add together, it is 95.7 million. From this, so on disposal, the parent share should be recycled to P&L. Parent's share. Okay, parent share should be recycled to profit and loss account. So how much? 80% of that total amount. 76.6. That's how you are getting exchange gain, which will be recycled to P&L, 76.6. Next, NCI will see. This is the way you have to do your working separately. Okay, when so much of steps are there, separate working, not in the main answer. So NCI at disposal is calculated as follows. Okay, dollar and million. NCI at first Jan per question. They have already given you as 47.8 in the question. Per question means is there in the question. What is the share of loss for NCI? See part B. 18.2. Okay, NCI is 20%. So out of that, you have to take. So let's see part B. If you see here, loss is for 8.2. You see, loss for 9 months is 18.2. So that loss, 20% will go to NCI. You have to deduct that loss. Next, exchange gain for. So what is the exchange, the share for 9 months? Not the total, not that's 95.7 20%. You are only adding 13.4 and 13 oh, 13.4. I'm not able. 13.4 and 8.2. On that, we are taking 20% and adding that. It's a gain. And finally, this is the NCI, 48.5. Why 13.4 and 8.2 only? Unlike parent where we took 74.12 also, we'll have to go to the question for that. Because if you see this, cumulative exchange gain on Bakelite, the 74.1 is for what? Is for parent. Even though they don't say for parent, it goes to parent only. That we cannot take for NCI. Okay, this is the opening for NCI, and we take the share 20% from that. Okay, 20% of this exchange, 8.2 of this goodwill, and then this 13.4 of the current year exchange. So we add, and on that 20% we take for NCI. Okay, and then we get 8.6 as a group profit on disposal. Next, the last requirement, treatment and presentation. So always make a subheading like this: treatment and presentation of backlight. Okay, so let us read this, and if you see, it is like fully discussion question. No calculation is required here. So for the year end 31st December 2006, Carbise will consolidate backlight for the first 9 months. Okay, so for this year, because we have to talk about this year, this is the current year end. So for this, what should the company do? Consolidate only for 9 months, first 9 months, for the year up to the date of disposal of the shares and subsequent loss of control. You have to talk about this. That there's a subsequent loss of control. Okay, that's why you are consolidating only for first 9 months. Because sometimes even if you dispose, also you are not losing the control. Remember, for example, before you had 80% share, you have acquired. Now you are only disposing 20%. So from 80 to 20, from 80 to 60%, still you are the subsidiary. Still you can consolidate. Only the shares changed, reduced. But here, fully you are disposing of, that means from 80 to 0, losing the control entirely. That's why you're not consolidating. So exchange differences. Okay, this is the first point. Okay, first point, you are saying that you have to consolidate for 9 months. First paragraph. Second paragraph, divide it in paragraphs and explain. Exchange difference. We are talking about exchange differences now. So exchange differences on the translation of the net assets, profits and goodwill. You are translating the net assets, profit, and the goodwill in relation to the 9 months to 30th January 2006 will initially be recognized in other comprehensive. Initially, whenever the exchange differences comes, where will it be recognized? Other comprehensive income. Third, on 30th September 2006, a consolidated. So you are talking about the consolidated profit and loss. Basically, all the previous steps, what you did, requirements, you are mentioning in one. This is like a summary for it, because it's like a treatment and presentation. Treatment means what are you going to do? Presentation means how are you going to present? In which place it will go? In the income statement under this one, or like, or in the balance sheet under assets, liability, like that. So here 30th September 2006, mention the date also each time. Consolidated profit or loss on disposal will be calculated in the consolidated financial statements of Carbise. In effect, the process are compared to net assets. So you are now saying what happened. The process are compared to the net assets and unimpaired goodwill not attributable to the NCI at the disposal date. So the cumulative exchange difference on the transfer of bank will be reclassified. So you see, the cumulative exchange differences, where will it go? It will be reclassified to profit and loss account. Very important. And finally, there's a small tutorial note. Let us read that also. So the presentation of a subsidiary that has been sold during the period of which is held for sale depends on whether it qualifies as a discontinued operation. It could be a discontinued operation also. State the relevant principle used to determine whether a component of a business is discontinued, and then apply it to this to the scenario. So sometimes it could be a discontinued operation also. You have to see whether it is classified as a discontinued operation or not. Why? Because if it is classified as a discontinued operation, there's a separate standard for it. IFRS 5, small standard, it deals with it. Okay. So let us go through that. Consideration should be given as to whether the disposal of backlight would be present. See, consideration should be given as the disposal of backlight. I'm sorry guys that there's a delay. Okay, disposal would be presented as a discontinued operation or not. So according to IFRS 5, there's a separate rule. What is it? IFRS 5 is when non-current assets are held for sell and discontinued operations. For bike to be classified as a discontinued operation, it would need to present a separate major line of business or geographical area of operations. You just cannot say it's a discontinued operation. You have to present facts. Like you have to say whether it represents a major line of a business or a geographical area of operations. So since Bakelite was initially acquired by Carbise, initially means in the beginning it was acquired by Carbise to gain easier access to international markets. Okay, why did Carbise acquire it? To gain access to international markets. Geographical area of operation, right? What does it mean? It is likely that this criterion would be met. Likely. Which criterion? That it's a discontinued operation because it has a geographical area of operations. That's why Carbise wanted to access to international markets. Okay, so that's it. With this we have finished, we have completed our question number 2 also. And before I end this video, let me take you to the examiner's comment and the marking guide. Very important. So part A, first part of it was for 7 marks, where we had to discuss about presentation and functional colors and determine how for backlight it will be determined. So 2 marks is only 2 marks for discussion of presentation and functional currency. That means 1 mark for the discussion of presentation currency, 1 mark for the discussion of functional currency. 5 marks. Okay, 5 marks are for the application to the scenario. That means how to determine and all. Next, second part of A, calculation of goodwill and calculation of exchange difference. So calculation of goodwill is 2 marks, but exchange difference is more. You say exchange difference is 3 marks. That's how you are getting the 5 marks. Third part, calculation of goodwill and application to the scenario. 2 marks only. An explanation of exchange gain and application to the scenario is again 2 marks. Is divided equally. Okay. Next, part B. Explanation of their exchange difference is 3 marks. Explanation of the exchange difference for the year ended 2006. The translation is 3 marks and a split between parent C. Split between parent and NCI is 1 mark. This is why I tell you that you have to split. Whenever goodwill is there, exchange differences are there, this needs to be split between the parent and the NCI. 1 mark is there. Imagine if you wouldn't have split it between the parent and the NCI, you will lose that 1 mark. Okay, and don't play around with this 1 mark. Okay, because sometimes 1 mark could be a difference between your passing and failing. You know, people fail at 49. So each mark very important. Try to not lose a mark also. Okay, through your ignorance or by you being not so serious about it. Don't throw away marks like this, where you can easily score marks. Part C, calculation. So calculation itself is 3 marks, but explanation is 4 marks. Group profit or loss on disposal and accounting treatment is 4 marks. That means 4 points you can give. Okay, so that's how you are getting the 30 marks. Now let us read the examiner's comment. Okay, it's very short and sweet, right? I hope it's sweet also. Okay, so in the first part, weak answers tended to list the factors determine the functional concept with little application to the scenario. You see, most of you, okay, I'm not saying you means the students who have already attempted this paper, what they have done is weak answers means they have given list of factor, but they didn't apply this to the scenario. It's no use that you are giving 5-6 factor, but you're not linking it to the scenario. Rather than that, give at least 2-3 points, but link it well to the case study. This will give you more marks. This will give you more marks, trust me. Linking is very important. If you're not linking to the scenario, even if you're listing 5-6 factors, all 5-6 factors are correct, still you are not getting the full marks. You will not get the marks. So it's not about listing the primary factor, all 5-6 factors, then secondary factor also. No. At least give 2 factors or 3 factor and a link to the case study. That will score more marks for you. Second, technical part of consolidation in this case. Second part of it, that means calculation of goodwill and all. Generally well answered. That means students are able to calculate goodwill. Although some candidates are often less prepared to perform a translation from a foreign currency. Translation from a foreign currency. Students are less prepared for this part. The reason is because this does not very commonly comes. Okay. And in fact, this I think this is the first paper where in section A, first question it came like this. Because in the past paper, if you see past papers, I think this is March June 2019 paper. Other papers, if you see, this question does not come there. Like foreign translation question does not come in section A. Groups come, but the local ones. So be prepared for this also. Okay, because I tell you, never be too confident in section A thinking group questions will come. I know consolidation, I know NIC, very well prepared, and suddenly something else comes up from that area. So you have to prepare for all the areas, all the standards. Okay. Likewise, explanations of calculations within the consolidation process, that is part 3, are often well answered, provided that the calculations have been performed well. So this shows that there's a link between your calculation and explanation. Candidates who are able to calculate well, okay, there's like a, what do I say, a correlation, that if you are able to perform well in your calculation, you also perform well in your writing also. You can write well. Because if you're able to calculate properly means you have understood it. That's why you have calculated it correctly, right? So it makes sense that you can write it also. And if you're not performing a calculation, then there is a very less chance that you can write it also so well. Because first of all, if your calculation is wrong means you're not understanding it. So how can you write? No? I'm not saying you will write bad. Definitely you're a good writer and all, but understanding is something else. If you're not understanding something, how can you write it? Write about it? That's what I meant. So that's what it's related. Okay. Although the question is broken into several sections, some candidates insist on answering as if it is one question. I always keep repeating there's a reason behind it. Because students repetitively they have been told don't deal it as one question. Every question has been broken down into separate requirements. Even in a separate one requirement, that requirement itself is broken into 3-4 sub requirements. Still students take it as a one question and lose marks. That's why I have shown you the marking scheme, to show you the breakdown of it. It's important that you understand. Just because a question says for 7 marks or 10 marks does not mean one question itself is for 7 or 10 marks. It's not possible that you can give 10 separate points and get the 10 marks, or 7 points and get this. No, it's not like that. Okay. Candidates are advised against this because it makes it difficult for markers to mark. Exactly. Imagine if you are answering, it becomes very difficult for the markers to give you marks. They don't know for which part of the requirement you are answering. Even sentences, when you write the beginning sentences, has to be so clear that candidates know that this is the requirement you are answering. That's why when you say, when you have read, okay, let me take in the beginning because we are over with it. I'm over with this question, so I can spend, I think, a few more minutes. Okay, in determining the functional currency, this is the first requirement. You see, in determining, the first line itself is so clear what which part of the requirement you are answering. In determining the that means functional currency has been determined. How it is determined for this company. You see, so even your starting sentence has to be like that for each requirement. That you should be able to, examiner should be able to know that which part of the requirement you are answering. Are you defining presentation currency? Are you determining? Okay, what are your primary factor? What are your secondary factor? Starting sentence, it says the starting word. They are so clear and broken down into separate paragraphs using different subheadings. Subheadings are in bold, so everything is understood. Okay, now because you have to type, you have to pay attention to all those things. How you're writing, how you're dividing in paragraphs, are you using subheadings, are you bolding out your subheading so that your subheading is shown separately? Is your calculation done separately in Excel? So all these things you have to take care of. Okay, because now it's on CV platform, it became much easier, I would say, to show, to make it attractive and more beautified. And when we were writing, it was more hard for us to do because everything was same. Our handwriting was terrible. It is not even understood, but at least you don't have that risk now, that you can type and it will be understood. The only thing is you have to work on your application, your CV platform also. You have to start typing by now. From now itself, you have to start typing the answers and start using Excel and performing calculations and formulas and all. I will also make a video on that very quick, shortly, on CBA platform, the functions and the formulas to follow and all. But for now, let us focus on the revision kit questions. Okay, so that's it with this. Okay, the next part will be on question 3, right? So see you in question 3, and don't forget to subscribe to my channel. Take care and see you.